This week was also very important for gold and silver because they both closed above the double top highs from late December. Many technical experts on YouTube and X were saying that this would mark the end of the gold and silver bull run. But they blew through those levels and set new highs with a lot of technical and underlying momentum. This proved that our exercise with the index last week was right, and that the double tops were just a break before the next move up. What's really amazing about this move is how fast it's going. Silver was up more than $10 an ounce for the week, even though it lost some of its gains at the end of the week. That has only happened twice more since 1971, giving it gains of almost 200%. Gold, on the other hand, has gone up 71% in the same time period and is about to make its move to $5,000 an ounce. The S&P 500, on the other hand, has been the story for a while now, but is now only up 20% in the last year. This is happening at the same time that gold and silver are proving their dominance as the two biggest assets by market value, not counting bonds or real estate. This is in line with what I said in 2024 and 2025 when I said they would be number 1 and 2 on this list. This is happening even though the S&P 500 is at an all-time high, and there is a big bubble in tech and AI stocks. Now that gold and silver are about to hit even higher highs, it's time to talk about how they get there. In this video, I'm going to talk about what happened to gold and silver in 2011 and 2026. From there, I'll use my foreign currency comparison method to show you what kinds of price changes you can expect by comparing those levels to the cycle top highs I told you about in 2024 and 2025. This will help you stay realistic about price changes in the future. Last, but not least, we'll talk about how the situation in the metals market could make banks and national governments act in a very desperate way. I want you all to know what will happen next and how this will change the value of your gold and silver. So please make sure you watch all the way through. Thanks for reading. Before we start, please visit summitmetals.com to find the best deals on gold, American Eagles, and other great gold items from around the world. Also, please think about them before gold goes up to $5,000 an ounce. Also, new users can get 5 ounces of silver at spot price while they're there. There is a link to that in the movie description below. And if you're selling, which I'm not, they'll buy your gold and silver right now at costs very close to spot. Talk to them to get a good price when you sell something on summitals.com. To jump in, I told you all last week that December wasn't the peak of the metals market. I used indexing to show you how different the highs in December 2025 were from the highs in 1980 and 2011. That is, there was no guessing. The numbers were used to show what was different. Talk about the Bloomberg Commodity Index resetting, I said, was just make-believe by the financial media and the big banks that own them to keep you from buying gold and silver. Some people are now saying that these new moves for gold and silver are like the 2011 blow-off top, which is why I'm telling you this. Before you talk about the 2011 blow-off top, you should know that it was caused by fear. Just a few years before 2009, the world had just come out of the global financial disaster. But now, the international bond market was having trouble because of Europe's high levels of debt. And one difference between then and now is that we haven't had such a fear yet. But when we do, it will happen. Trust me. Things are going to get a lot worse than they were from 2009 to 2011. Why do I say that? Because in 2008, China bought hundreds of billions of dollars worth of US debt and played a big part in fixing the world's financial system. That amount of working together and coordinating around the world is no longer possible. China is selling US debt right now, and those holes in the Western system will be filled by new bills and electric dollars that we know the Federal Reserve is already making as of December 2025. Also, it's clear that the world is more divided now than it was in 2011. This is true no matter which side of these points you support. First, there are still a lot of risks of war. There is a global war going on over resources, and tariffs are causing economic insecurity around the world. Yesterday, we got another taste of this as the Trump administration put more pressure on Europe to take control of Greenland. All of these things are hard for buyers, and in the end, it makes metal prices go up, just like it did in 2025. And in 2026, we'll be getting even more of that. This won't go away. As opposed to 1980 and 2011, US interest rates are still going down. This is the second and most clear reason why gold and silver prices are not close to their all-time highs. Another important thing to know about cycle tops and gold and silver prices is that they never happen before interest rates are low. And some people who follow the market think that rates will be cut 3 or 4 more times in the US in 2026. I'll say it again. We're not at the top for gold and silver. It's not 2011. And while I used to say that the price of gold and silver was somewhere between 2003 and 2006, I think it's more accurate to say that we're now somewhere between 2006 and 2007. This is close to the end of the first wave of gains for gold and silver, but the biggest moves for metals are still to come in US dollars. The US dollar is about to make its next big drop because the Federal Reserve is printing more money, which is causing prices to rise. At the same time, there is a lot of global uncertainty, which is making more devaluation happen instead of less. And there will be more interest rate cuts in the future. And when the US dollar goes down again, gold and silver prices will go up in the same way that they have in other Western and Western-aligned countries like Australia, Canada, and Japan. I've already shown you this example, where gold prices have gone up by 258% or more compared to their 2011 highs, when they only went up by 152%. As I already said, the price of silver has gone up a huge amount in US dollars over the past year. It's almost tripled in price. It is only 88% higher than its all-time high in 2011. In the comparison countries of Australia, Canada, and Japan, it has already gained between 177% and 266% compared to those countries' all-time highs in their own currencies. In other words, gold and silver prices still need to catch up to where they are in other parts of the world before they become more common in the United States. Gold should go up to $7,500 an ounce, and silver should go up to more than $150 an ounce. And that could happen as early as this year, with a lot of ups and downs along the way. I'm not saying there won't be any price changes as we move toward my cycle top goals for gold and silver, which I first set in 2024 at $11,800 an ounce for gold and $25 an ounce for silver. At that point, I'm warning you all that I expect a pause and some price consolidation. If you're in metals today, I want you to keep what you have. Also, if you're new, don't let the newest moves put you off. As long as you stick to your buying plan, gold and silver will continue to rise. On the other hand, dollars, euros, yen, and other fake currencies around the world have full freedom to fall. That's why please remember that. Okay, before we talk about buying and selling limits on gold and silver and how they will affect the market, please remember that if you sold some gold or silver because you were afraid of a drop or because it had gone up so much, you might want to put some of that cash into other hard assets, like land, which you can easily and cheaply buy from our channel partner, landofland.com. Land of Land can help you find a lot that fits your needs and your budget. Lots start at just $1,000 and can be found in both rural and urban places. You can pay with a credit card and they'll get you the title record quickly. You can call them at the number shown on the screen or go to landofland.com to get some help choosing the right lot for you. Don't forget that if you use the code BALDGUY, you can get $300 off your order, which can be used to buy something that the Federal Reserve can't print. Aaron Fulps asked, what happens if the big banks that are short silver, that is, betting against the price of silver and are currently going bankrupt, what happens if they get a bailout from the government? I'm going to take a moment to answer Aaron's question and show you all how bad things are for silver, gold, and the fiat currency system in general. If there's one thing we learned from the global financial crisis, it's that countries all over the world, including the US government and the Federal Reserve, will step in to save banks that are in trouble. That was really clear in 2023, when the Federal Reserve started its BTFP program for short-term loans to banks. Some of you may remember that, to save banks that had huge unrealized losses from bond prices dropping after interest rates went up in 2022 and 2023. And this is the policy, along with the fact that US banks are still suffering from unrealized losses, which you can see on the screen right now. So what I want to say about bailouts is that we still have to deal with them. That said, despite some well-publicized stories about trading desks at some large banks shorting or again betting against the price of silver, I demonstrated in 2 videos last year that the largest banks have started to go long or bet for the price of silver to go up, with some of the manipulations we saw around the $50 level signaling that large players were smashing the price of silver down, not to keep it down, but to be able to get in at a better price, leading into the major breakout in silver price with the November 2025 computer crash caused by an alleged cooling issue at the Chicago Mercantile Exchange, being the major moment I have said banks flipped from being against silver to betting for silver in a situation that was an exact copy and paste of what we saw documented in the famous film The Big Short. For those of you who have seen it, where banks use the excuse of a computer crash to hide the fact that they were dumping worthless mortgage bonds on clueless investors, who were buying them up as the banks themselves started betting against the very bonds they were selling. And I bring this up to say that bank bailouts will still happen in 2026, but that has nothing to do with the price of silver or gold. Big banks are hoping that they will go up now, and most of us know that there isn't enough of the metal, especially silver, to go around. Josh Farr, the founder and CEO of the Scottsdale Mint, said it all in a great way as well. He even showed up on my station last year, and I'll be meeting him at the World Money Fair in Berlin, Germany in 2 weeks. Please let me know in the comments below if you'd like to see me make another video with him. What he did, though, was 2 days ago on X. Since then, more than 700,000 people have seen it. It also talks about how valuable metals, especially silver, have changed since 2025. You can watch the video clip below to see for yourself what he said. Even though it looks like everyone is getting ready to join this new bull market for precious metals, that doesn't mean they back it. That doesn't mean they want you to take part in it or get something out of it either. Banks are currently securing their positions in gold and silver, but they are actively trying to keep customers from doing the same. They do this by spreading false information, like the Bloomberg rebalancing story, to make you think a big price drop is coming so you won't take your money out of the bank to buy something they can't control. People are even being stopped from using the money they have in the bank in the worst cases. They use scams in the precious metals market as an excuse to keep people from buying gold and silver, even from reputable dealers, as this clip from X 2 days ago by Taylor Kenny shows. I have permission to use it. This is what she said. They are blocking the ways to get gold and silver. This is also known as capital controls, which are limits on how you can spend your money set by banks. Allow me to explain. I work for a full-service jewelry store that sells gold and silver. Today, we had several clients try to wire us money so they can buy gold and silver to get away from the failed fiat system. As you might guess, banks are no longer letting the wires go through. This is true for all precious metals companies, not just us. Now, they say that the formal reason is that they are afraid of fraud and online con artists. That doesn't mean there aren't any in the room, though. But for these banks to make it a rule that you can't have any gold or silver, it means they don't want you to leave their system. They want you to stay with paper money. They won't make any money off of you if you turn your money into real gold and silver. They have no power over you. They can't freeze or take your things. The lie they've been spreading is falling apart as more and more people wake up. Now, these are only short-term fixes for a problem that is getting worse as more and more regular people want to keep physical precious metals instead of fiat currency. When things go on, I think more harsh steps will be taken. I'm not saying any of this to scare you or force you to buy gold and silver right now, but you should know it, because the next thing that will be done to stop people from stacking physical gold and silver is to price them out of the market totally. At the current spot price, the average US household can only save 37 ounces of silver over the course of a year. These are new numbers, by the way. This is 93% less than what the average household could save in 1990. A lot of work wouldn't be needed to stop people from stacking real precious metals. And the model I think will be used at some point is the one that is being used against people in Europe who stack silver right now. This part of the movie is very important for Americans to pay attention to, because when you buy silver in Europe today, you have to pay an extra value-added tax on top of the price. Usually, an extra 20% or more is added to the price of silver bullion products when you buy them. That's why people in Europe who still buy silver in bars pay more than $110 an ounce for silver metal today. This is an example from a Polish website that sells kangaroos made of 1 Oz silver. As a warning, I use this example to show that metal prices are still going up. If you wanted to protect yourself, you could put even a small amount of your funds in gold and silver. Do not put all of your money into gold and silver at this time, but do put some of it in now. Once the news stories and temporary bank restrictions on buying gold and silver stop working, this kind of taxation system will be put into place. Your silver will be worth more on the secondary market than its spot price, even if you sell it back to dealers, while the market adjusts to the reality of taxation. And the United States does not yet have this situation, this fact, this market dynamic. People in Europe are also dealing with this, as traders buy silver from people who want to sell it back to them for more than $6 more than spot today. But if you want to take advantage of this and get ahead of what's likely to happen in the future, you need to act now. If you wait any longer, I think it will be much harder to get into gold and silver. The thing that will stop you from getting in is not going to be a law that says you can't own it. Price and taxes will be the main problem as far as I can tell, making it impossible for most average people to join in the first place. That doesn't mean that the market will become so expensive that no one will be able to buy or sell gold or silver there. Naturally, this only means that you'll be able to buy and trade fewer ounces of gold and silver in the future as their prices rise compared to other commodities on the market. This is because fiat currencies are losing value and people are moving their savings, especially wealthy people with a lot of money in bonds, into precious metals. Don't get the wrong idea. I'm not saying that the whole market for rare metals is going to crash because they become too expensive. That's not what I mean. If things keep going the way they are, it will be much harder to pay to leave the fiat currency system. To put it another way, leave while you still can. That's all I have to say about this movie. I hope everyone has a great day and week ahead. If you liked this, remember to look after yourself and each other. Please take a moment to click like below. That way, this post can reach more people who might need to hear my message. Don't forget to share this video with your friends and family if you think they would benefit from my message, my content, or the way I show it. It helps my channel grow. I'll see you all in the video next week. Thank you.